This week in the parish of bourses and market structure, DB1's 1984 results, 6 gains Aquis Power, ICE record, and CBOE restructures, alongside a Toxic CMU. My name is Patrick L. Young. Welcome to the Bourse Business Weekly Digest. It's the Exchange Invest Weekly Podcast, episode 320. Good day, ladies and gentlemen. This is a very brief reduction of highlights amongst the key headlines from the week in market structure. All the analysis of the many events and happening from the past 7 days can be found in Exchange Invest Daily Subscriber Newsletter, the unique guide to the Bourse business sent daily to your inbox. More details at exchangeinvest.com. Over in BitCarnage, we've been challenging reality. Clearly, there is only one version of reality, I presume, but the crypto bros dispute that the wisdom is with the banks. That's after a Cointelegraph headline referring to a comment by someone at Coinbase, their policy chief Faryar Shirzad, who said banks' concern over stablecoins ignores reality. Meanwhile, President Trump doesn't know who CZ is and has thus pardoned him because of the Biden-era witch hunt. A lot of folks appear to be muttering, "Is that fish I smell?" If you enjoyed this excerpt, you may be interested to know you can read BitCarnage every day on Exchange Invest. Alternatively, if you want to follow BitCarnage, the daily update on happenings in the world of crypto and digital assets, you can find BitCarnage as a standalone on Substack. This week in exchanges, the Euronext CEO, Stefan Bujna, has said he's open to stock market consolidation, including with London, as the Germans pursue their moronic monobourse idea. Trinidad and Tobago, they're gearing up to launch what was headlined as a spot market, but it's actually a derivatives market, the first in the Caribbean. Well, at least the first in the Caribbean since Intex in Bermuda in 1982, I do believe. Maybe 1983, maybe the 1970s even. At the same time, the Johannesburg Stock Exchange has been celebrating the 30th anniversary of what was originally the independent SAFEX, its commodities market. In results, it was a frantic week for results in the parish. All the details from Exchange Invest Daily, the newsletter no person can afford to be without in capital markets and market structure. For the sake of this podcast, let's look at some edited highlights. Intercontinental Exchange have reported a strong Q3 2025 and they approved a fourth quarter dividend of 48 cents per share. Record revenues once again ticking up elegantly, operating income up 6%, and thus ICE's up again in record territory, while a lot of discussion during the investor analyst call surrounded the prediction markets, which suddenly analysts appear alive to. That certainly took a while. Good results also from the likes of Tradeweb, with net income up 61.7%. Adjusted net was actually plus 15.2%. Deutsche Börse, pretty soporific. Welcome to the EU's aspirational monobourse, where disproportionately high profit growth means 7%. Europe is doomed is the other phrase which springs to mind. CBOE, they announced pretty impressive results, total revenues going up 14%, net income up 38%, and also a hugely sweeping reform, which we will get to in a few minutes. Thanks for listening to Exchange Invest Weekly. We welcome your feedback. You can contact me directly, Patrick at derivativesvision.com, with any comments. Meanwhile, if you enjoyed this show, we would welcome you giving us a thumbs up, or if you have time, a positive review will always be welcome, wherever you find this podcast. Over at Coinbase, amongst others in the many reporting results last week, the Coinbase CEO rather made an idiot of himself. Brian Armstrong looking embarrassingly naive at best, with a ludicrous prediction market stunt which ought to result in a serious sanction for his, at best, immature action amounting to conduct and becoming of a CEO, let alone the CEO of a major public listed entity. To which end, there were also great numbers. Revenue up 55%. Net income up 473%, but it was the prediction market stunt that hurt Coinbase's reputation. Over in deals, a busy week for deals in the parish. All the deals were in Exchange Invest Daily, the newsletter no person can afford to be without in capital markets and market structure. For the sake of this podcast, some edited highlights. JP Morgan unit is amongst those that have invested in the latest colossal round for the Texas Stock Exchange. The incredible fundraising continues. It's not clear what coherence there is to the business model at any level of funding, but hats off to CEO Jim Lee. He has collateral in a cold, hard US dollar cash. Meanwhile, CBOE, they're retreating from Australia. That couldn't come at a worse time for ASIC, just as they're trying to inject competition against the lumpen and incompetent monopoly of ASX. The tragedy for Australia is that ASX may be about to get off the hook again. The ridicule of the AFR's cartoonists, amongst others, will be something the incapable CEO can stomach if she retains her ludicrous sinecure for delivering anything but success. On the other hand, perhaps there may be a foreign bidder with potential, or even a local coalition of the willing might relish the chance to take the battle directly to the incumbent monopolist, which has pioneered FAAS, failure as a service. ASIC need to look serious at cutting the CSD and other clearing services away from the ASX ambit, even if it is a time-limited process to enable Australian markets just as much as it needs to ensure the good folks of CBOE finds a new owner which wants to develop business down under, as opposed to the renewed management fixation from the Chicago Board Options Exchange Group, with the Chicago Loop defining a great deal of CBOE's reach. Finally, in deals, the NSE IPO will see the light of day, and who said that? None other than the SEBI chief, Tuhan Kantapande. Don't forget, if you fancy some financial insights with moving pictures, check out our live stream Tuesdays 5 o'clock London time, midday New York time, the IPO video live show. Catch the back episodes on LinkedIn and YouTube via IPO-VID. Coming this week, we got Face Your Financial Fears with Jake Cousineau. Our book of the week this week, Wall Street's Blind Spots, by one of our recent guests on IPO-VID. Jose Mayora exposes what investors routinely overlook their blind spots and explains why failing to address them can weaken their entire investment thesis. A great read, that altogether, and that's why it's our book of the week, which is announced every week on Saturdays in Exchange Invest's Weekend Edition, the EI Weekend being absolutely free to read. Sign up now at exchangeinvest.com. Meanwhile, look forward to the conference highlight of the year. After keynotes from Nairobi to Yerevan and further afield, I'm joining the AFM Tech Day to chat with the OG of ETD and many other markets besides, Professor Richard Sander. How can you possibly not be in Chicago Friday, November 14th for what promises to be the panel of the year? Over in product news, the clear takeaway from a seemingly innocuous ICE product note is that the idiotic protectionism of the EU towards the euro has enabled some clearing to move to the continent. In this case, it's going to go to ICE Clear Netherlands for euro short-term interest rate futures contracts, but it's not at the apparent EU preferred monobourse DB1. Thus, we end up with the kind of dog's dinner which is a Eurocrat's delight and the market nemesis, potentially bifurcating risk pools and other factors, which the exchanges will seek to mitigate, but existing in essence with the removal of a holistic pool. At the same time, it's amusing to see the EU's idiocy stymied by market innovators who believe in making better markets, as opposed to lobbying their way to a rentier monopoly like Deutsche Börse. In technology news, Mega News 6, the Swiss exchange, are going to harmonise trading platforms across their trading venues, with Aquis Technologies selected as the technology provider. For those of you who had their intuition in off mode, you may find this surprising, whereas I seem to recall we at Exchange Invest were early in pointing out that it made total sense to unite 6 platforms under Aquis. A majestic triumph for Aquis and a great move by 6, which will internalise tech and thus reap financial rewards for Bjorn Sibern's growing Swiss exchange-centric empire. Bit of a glitch over at MCX. They finally resumed trading after a 4-hour outage, and ultimately they look to be sanctioned by SEBI in due course. Regulation news, one key pointer. Even the FT have reported that the European Union are set to expand their supervision of stock and crypto exchanges by centralising everything under the remit of Paris-based ESMA, completely and utterly defying the whole concept of national sovereignty within the European Union, in a misplaced race to create some form of capital markets union. A new era of mud huts remains a plausible outcome for the European economy. Career paths this week, old news in many ways, but there was a report in MSN indicative of the UK's decline and fall as an economy thanks to the generation of socialist pillocks running the country since Tony Blair, albeit they were through several allegedly ideologically different parties. Anyway, good luck to Alistair Haynes, who's now in Dubai, and indeed it's worth considering that given his achievements creating Aquis, a £10 million, $13 million US profit from his labours in pioneering this market is hardly a major bagatelle. Also indicative of the risk-off culture which prevails in Europe. All the very best to Alistair in Dubai, along with his lovely Kazakh wife. Congratulations finally this week to Cameroon's President Paul Biya, who remains the world's oldest leader after winning a disputed election that gave him an 8th consecutive term. In other words, he came to power in 1982 when UK PM Margaret Thatcher, President Ronald Reagan in the US, and Pope John Paul II from the Vatican were just getting going with reshaping the world and killing communism as it then was. And on that mysterious and magnificent note, thank you for listening to this EI Weekly Podcast number 320. Join us daily via exchangeinvest.com, or if you have a new exchange you'd like built, get in touch. My name is Patrick L. Young, and I wish you a great week in life and markets.
This show relates to the business of bourses. It is not to be construed as investment advice, nor are we making any investment recommendations. Please consult an investment advisor before you make any investments, and for goodness sake, do your due diligence and do not make investments without complying with the regulations in your home state. Exchange Invest cannot be held responsible for any investment decisions made as a result of our program, which is for entertainment purposes only. The material herein is copyright Patrick L. Young at the date of publication, while our music and sound effects are sourced from copyright-free sources. Thanks for listening to Exchange Invest Weekly, the exchange of information.